All right, so Korn Ferry just dropped their latest Q1 earnings report, and wow, it tells a really fascinating story about a company that's making some smart moves in a pretty tricky economy. Today, we're going to go way beyond the headlines. We'll dig into their diversification strategy, their huge bet on digital, and of course, what we think it all means for the stock. Let's get right into it.
Okay, here's the game plan. First, we'll hit those headline numbers and what they signal. Then, we're going to unpack the two big pillars of their story right now: diversification and that digital transformation. And we'll wrap it all up by looking at their guidance and the key takeaways from the analyst call to build our own forecast.
All right, first up, the headline numbers. Expectations were a little shaky coming in, but Korn Ferry, well, they delivered a pretty decisive beat.
So the number that really turned heads? Adjusted earnings per share came in at $1.31. I mean, that's well ahead of what anyone was expecting, and it signals some really strong profitability. But the question is, how'd they do it?
Well, that awesome bottom line was really driven by surprisingly strong fee revenue. We're talking $708.6 million. In an environment that management kept calling choppy, growing your top line by 5% year over year, yeah, that's a pretty big deal.
So when you lay it all out like this, you can see it was just a clean beat, right across the board. They blew past EPS estimates by 7 cents and just sailed by on revenue. But you know what's really telling here? The detail I'm looking at? It's that margin expansion. Growing your adjusted EBITDA margin by 50 basis points shows this isn't just about revenue growth, it's about real operational discipline.
Okay, so the numbers look good, for sure, but what's the real story driving all this? Honestly, it all comes down to their core strategy: diversification.
Yeah, the CEO, Gary Burnison, he pretty much set the tone on the earnings call. He basically said, look, things are choppy out there, but our strategy is absolutely working. And you know what? This wasn't just some rah-rah talk. The actual segment performance totally backs him up.
And here is the proof in the pudding, right? Just look at this. The company's transactional businesses were the absolute engine of growth this quarter. Professional search and interim, they surged by 10%, and that super high-margin executive search business, it posted a really strong 8% growth. That's its 5th consecutive quarter of growth, by the way.
So this is what they're calling their diversification flywheel, and it's actually a pretty clever idea. Think of it like this. They're taking the big profits they're making right now from their really hot recruiting businesses, and they're using that cash to fund and grow their more stable, long-term contract businesses. It's all about using today's strength to build tomorrow's stability.
And you can see that flywheel spinning beautifully in their RPO business. That's Recruitment Process Outsourcing. This is a much more stable, long-term revenue stream for them, and they landed a massive $99 million in new business just this quarter. And get this, almost half of that came from brand new clients. That's huge. It means they're not just keeping old customers happy. They are out there actively taking market share.
Okay, let's switch gears and talk about what might just be the biggest catalyst on the horizon for these guys: their big push into digital. This is a huge focus for both management and for investors.
So what they're doing here is pretty bold. They're basically tearing down the old house to build a new one. They're taking a non-cash charge now to sunset their old digital platform. And why? To clear the way for their shining new, all-in-one Korn Ferry talent suite.
And for anyone investing, this timeline is absolutely crucial to understand. So step 1, that financial hit, they're taking it right now. Step 2, the big launch is coming in November. But step 3, and this is the important part for your calendar, the real payoff, the financial benefits, they don't expect to see those until the end of calendar year 2026. It's a classic case of short-term pain for long-term gain.
So, where does all this leave us for the next few months? Let's dig into their guidance and what the analysts were asking about, because it gave us some really important clues.
Okay, so for Q2, they're calling for about $700 million in revenue and an EPS around $1.28. Now that's pretty much in line with what Wall Street was thinking. But, and this is a big but, they kind of hinted on the call that this guidance might be, and I'm quoting here, a little bit on the conservative side. Wink, wink.
Man, the Q&A with the analysts was super insightful. A few big things really stood out. First, they didn't pull any punches. Straight up called it a 2-year labor recession in the Americas. Then, they talked about how this peak 65 thing, all the boomers retiring, is what's fueling their executive search business. They're also feeling pretty good about Europe and Asia. When it came to AI, their take is human plus AI, using it to make their people better, not replace them. And finally, they pointed out the private equity is still a huge, reliable engine for them.
All right, let's put it all together. We've got a solid beat, a strategy that's clearly working, and a big catalyst coming up on the horizon. So what's our call on the stock?
This is the big question, right? For anyone holding or looking at this stock, where does KFY go from here?
From where we're sitting, there are a few key things that could really push this stock higher. First and foremost, they have to absolutely nail that talent suite launch in Q3. That's not negotiable. Then, we need to see continued strength in that high-margin exec search business. The resilient margins, the backlog in RPO that gives us visibility, and of course, they need to keep returning cash to shareholders. It's a pretty compelling list of catalysts.
So when you add it all up, they're performing well in a really tough environment. They have this massive strategic shift happening with the talent suite, and their own guidance seems a bit cautious. We're giving this an outperform rating. They're executing plain and simple, and they've got a clear path to future growth.
Okay, so if you agree with that view, how could you play it? Well, one potential idea, and this is a bit more aggressive, is to look at call options, specifically options that expire after that November talent suite launch. You'd essentially be betting that the launch goes well and that the market starts to see Korn Ferry in a whole new light, more like a tech company than just a simple recruiting firm.
And that's our deep dive on Korn Ferry's quarter. It's a really interesting story right now, a company at a real inflection point. We'll definitely be keeping a close eye on that November launch. And as always, just a reminder, this is not financial advice.